Hi, thanks so much for joining in. You're watching Ask Profit on NDTV Profit, and my name is Alex Mathew. This show gets you answers to all of your stock-related questions, and to that end, if you've got them for us, you can send them to us on that number that you see on the bottom of your screen. Whether they're short-term technical in nature or long-term fundamental, don't worry, we've got you covered. For now, let's take a look at where the markets are right now so that we can set the context for today's chat. We've got the benchmark indices that are trading currently with a narrow gain, and we're at very close to all-time highs. In fact, the Nifty 50 just about 50 points off the high point of the day, and that also is a fresh all-time high. We also have the broader markets to talk about, and in fact, you saw the benchmarks outperform, and therefore the market breadth tilted in favor of the advances. In fact, the sectoral picture is also something that will give you a sense of where things stand right now, because you see mostly green on the screen. You have the likes of the PSU banking pack that is finally participating. In fact, on Friday, you had the banking index led by a few private sector banks that was one of the top gainers. The banking index gaining about 1.5%. Today, it's not doing too much. It's gaining only about 0.3% or thereabouts. We'll see if that changes over the course of today's session. Oil and gas, realty, energy, all gaining over 1%. Auto is also doing well, up about 1% or thereabouts in trade today. But we're focusing on one particular counter at the start, and this is a stock that got beaten down in trade last week. Vodafone Idea, on the back of that Supreme Court verdict, got trolloped. It got hit quite hard. And the reason for that was, of course, the negative news on the AGR dues of as much as 70,000 crore rupees for Vodafone Idea. Of course, the latest development is a positive one, and that's the reason why the stock is up about 5.8% in trade today. It has to do with a technology deal worth about $3.6 billion that will help it improve its network offering. We've got Rucha joining in to give you some context as to what this is all about. Rucha, this is a significant development for the company. What does it mean for it?
After a more than 10% slump last week, Vodafone Idea is up around 14% on the intraday high basis. Now, this is on the back of a deal which has been won by the company. Now, this is a $3.6 billion deal or 30,000 crore rupees of deal. Now, this is with Nokia, Ericsson and Samsung, wherein Nokia and Ericsson were its partners since before, but Samsung is a new entry towards this partnership. Now, this is for the supply of network equipments, where Vodafone Idea will deliver such network equipments to these telecom giants over the next 3 years. Now, this marks the first step of Vodafone Idea towards its 3-year capex plan of around 55,000 crore rupees. Now, the capex plan which the company had announced is directed towards expanding its 4G coverage and launching 5G in key markets. It also helps Vodafone Idea in expanding its capacity in line with the data growth. Now, the other recent update include the AGR dues which the Supreme Court had rejected, the plea it had rejected, which was filed by the telecom companies. Now, talking about the AGR dues, the Vodafone Idea owes around 70,300 crore in AGR dues versus a cash balance of 565 crore. The company in the filing also mentioned that it is in advanced talks with its lenders to raise about $350 billion towards the long-term capex plan. So this is what the Vodafone Idea is up to, wherein it is aggressively spending on building its infrastructure and hence, working towards the 3-year capital expenditure plan, which it had announced stating VI 2.0 earlier this year.
Thanks so much for giving us that perspective. It's going to be important for Vodafone Idea to hold on to the customer base that it currently has. Still about 17% of the market share is what it's holding on to, but that is being eroded over the course of the last several months. We've seen that. Let's get our experts on board. We've got Ashish Maheshwari, Director at Arihant Capital Market, as well as Rajesh Palvia, who's the Senior Vice President, Technical and Derivatives Research at Axis Securities. Thank you so much to the both of you, as always, and good morning to you. I'll come to you first, Ashish. Arguably the stock of the week last week for all the wrong reasons, Vodafone Idea, and then this week at the start it's gaining about 5.8% as we speak. Is this something that you would venture into, or would you say it's too high risk?
No, I think Vodafone Idea was always high risk, high return kind of play. So those who are interested to take that plunge, I think 52 people low was 9 rupees and high was almost 19 rupees. So they got like those who took the risk, they got the return. But at the same time, I think this AGR related ruling is not favorable for these companies, maybe Vodafone as well as Bharti, etc. also. So this is negative in my view as far as Vodafone prospects are concerned. Though this $3 billion kind of new investment in 5G was a pre-planned move. This is not something that came suddenly. I think this is just to support the stock price, and today their meeting management is meeting analysts also. So some positive terms they are going to do. But still, in my view, cash is cash, because ultimately you need to pay government whatever the dues Supreme Court has pointed out. So the pressure is going to be there on the stock, and we have seen today also after touching 8-9% again, the stock is almost hovering near 11 rupees. So my call is avoid on Vodafone. In my view, in this sector, we should remain focused on Bharti, Airtel, and Indus Tower.
Bharti Airtel and Indus Tower, the focus. Stay away from Vodafone Idea. A lot of retail participation, by the way, in Vodafone Idea. So if you've bought or if you have attempted to buy at the lower levels, do bear in mind that this is a high-risk strategy, and that is something that most experts on this platform have pointed out. There are several questions that have come through on social media as well as on the WhatsApp number. I'd like to tell you, if you're tuning in for the first time, that you should tell us your name when you message us, as well as where you're tuning in from, so that you can identify when your question is being taken. The first question we'll take today is from Mr. Reddy, who's asking about Aarti Drugs and whether or not to buy at this juncture. He's writing in from Hyderabad. The stock is currently trading at about 520. It's not done too much, in fact, over the last 12 months, and it has lost quite a bit of ground even in the last month or so. The questions for you, Rajesh, on the charts, does it make any sense to buy at this juncture?
So we have seen stock has corrected from its recent swing high of around 630 kind of level, and now stock is almost trading near to its previous swing low, which was formed in the month of August itself, which is placed at around 495. So looking at the near-term structure, stock is in a weak zone. Stock is trading below to 20-day, 50-day moving average. The way near-term structure is placed, I think 550, 560 is the major supply zone at this juncture. Until the stock not crosses above 560, may remain under pressure for some more time. On the downside, 495 should be kept as a strict stop loss to follow. If it slips below to 490, I think furthermore supply pressure towards 450 we could see in the near-term to short-term basis also. So I think if you are holding the position, 490 needs to keep as a strict stop loss.
One of the underperformers, if you can call it that, over the last year or so. Pooja Gajwani, who's writing in from Mumbai, has got the next question, and she's asking about REC, which she's bought at a level of 570 per share, and the stock is currently trading below that price at about 547. This is a stock that has gained quite significantly over the last year, Ashish, and I think a lot of investors will want to know, should you hold on, especially if you bought at slightly higher levels? What should the strategy be with something like an REC, which is a long-term play, no doubt? Would you buy consistently over a period of time and hold?
We have seen across the board profit taking in PSUs, railways, defense. So this stock also has fallen from 100 by almost 100 rupees from its high. But fundamentally, nothing wrong with the company per se. And as company is looking at almost 10 lakh crore worth of loan book in next 5 to 6 years. So growth is bound to come because this kind of like loan book, they have to triple loan book in next few years. So only thing is, as almost all PSU stocks have reacted, or the profit taking has taken place, so this stock has also come down. But in my view, if you're a long-term investor, stay put here. And in fact, I'll advise at 520 odd levels. Even you can look for averaging this also. Fundamentally, nothing wrong.
Okay. I'm talking about the next stock, which is Foseco Industries. And the viewer, Venkatapati, who's writing in, has said that he bought at levels of 250. The stock is currently trading at 4,783. It's up as much as 5% in trade, and it's a considerable profit that Mr. Venkatapati has made in this purchase. Now, he has noted that it's not a very liquid stock. In fact, it is quite illiquid. He has already recovered most of his investment by way of dividends. The question is, would you hold on to this? I see online that this is a stock or company that is involved in iron and steel, and it has a foundry, in fact. I'm just wondering, Ashish, do you have coverage? Have you looked at this stock? And if so, would you hold on to Foseco Industries?
This is an MNC company. Like if you see MNC company stock, high dividend yield, even if we see their equities, this is also, I think, very small equity. And numbers wise also, from 45 odd crore, they did 70 crore profit in last year. They follow, I think, December year. So company is doing good, and there's the reason stock has also appreciated from almost 2,800 to 5,300 rupees in this year. And in my view, these MNC stock with a niche that they're into foundry business where not too many people are there. So in my view, just stay invested here. Though you have bought a stock at quite low level, but until as you require money, don't sell such blue chip stocks.
Yeah, that's a fair point. And in fact, Mr. Venkatapati did mention that he's not in a rush to get money. So therefore, from that perspective, if it's already something that you've recovered your cost on, Mr. Venkatapati, Ashish says that it's a good idea to hold on. All right, Kunal's got the next question. He's writing in from Chennai, and he's got JK Cement, 10 shares, which he's bought at levels of 4,705. What would the short-term call be on this? 4,705 is the buy price, which is very close to the market price right now. Rajesh, what's the view?
The stock is in uptrend, and clearly a series of higher top, higher bottom formation stock is making in JK Cement. The way stock is placed across all time frame, we believe that furthermore upside going forward we can see in the stock prices, and possible target on a short term we can expect around 4850 to 4900, but on a longer term I think stock has potential to continue this upward trajectory, and possibly if market remains in the same behavior, so I think possible target on a positional perspective would be around 5500 also. So I think trailing of one can keep a stop loss around 4600 to hold the long position.
Okay. Yash from Gurgaon has got the next question. Bandhan Bank is the name of the counter that he's looking at. He's already bought 250 shares at a price of 218. Again, not too far away from the current market price, but he's been holding for more than a year, he says. The stock has not done too much in that time frame. In fact, it has lost ground. He's looking at the target for the next 3 months, and since it's a relatively short-term trade, Rajesh, what are the possibilities of him recovering his buy price and making a profit here, or should he just exit?
So Bandhan Bank is underperforming stock, and though some recovery is taking place in the stock from the recent swing low, which was formed at around 175, 180 kind of zone, but still in this recovery, stock is struggling to cross its major supply zone, which is placed at around 250 to 220 kind of level. So till the stock not able to take out 220 to 220 level on a weekly closing basis, I think underperformance is likely to there, as other private banks are doing good, and I think here still underperformance there. So 220 is the major supply zone. If it crosses, then possible target on a positional perspective we can expect around 240. At this juncture, some recovery may take place. So I think I would suggest to keep your strict stop loss now around 202 to hold the position around 220, or again review it if something changes in the formation. I think then continue to hold towards the target of 240.
We've got a question on F&O, and I believe this is on NMDC. Surendra has got this question. Just want to point out, Surendra, that we've got a dedicated show, the F&O show, that is at 10:30 a.m. every day. And in fact, they do take a few of your queries as well. So perhaps you can tune in on that tomorrow, since the time frame is still some time away. I think you're looking for expiry this week, right? Let's hold that question for tomorrow then. We've got RCF, Rashtriya Chemical Fertilizers, which we're talking about next. And we've got Vijendra from Kalyan who's writing in. He's bought at levels of 213. He's got 800 shares. And he's wondering how long to hold this for. Since he's not specified a time frame, he's seeing a loss of close to 20,000 rupees on this investment. Ashish, on the fundamentals, would you hold on to RCF? And what are the factors that could affect its fundamentals going forward?
These fertilizer stocks, etc., they're quite seasonal kind of play. Whenever any government announcement is expected, then you see some momentum. After that, it fizzle out also quite fast. So because it's typically a commodity play. So I think that latest figure was almost 24,000 crore. Some new cabinet approved new subsidy for P&K fertilizers, which can benefit all these companies. But I don't see any major run-up which can take a stock to maybe 250 or 300, because again, these PSU stocks are languishing quite some time. So whenever they start rallying, a lot of selling may also start coming. So in my view, between 200 and 210, whenever you get these price, you can exit from this stock because there's not too much upside I can foresee.
Fair point. A lot of regulations and a lot of the government's plans with regard to urea, and as Ashish was pointing out, the specific fertilizer compositions that you need to pay attention to. Anuj from Mumbai has got a question on Gujarat Gas. He's got 10,000 shares. His price is 520 rupees per share. So he's making a solid gain here. The stock is currently trading at 618 or thereabouts. Rajesh, from the perspective of the fundamentals, it's a stock that has gained over 40% over the last 12 months. What is the potential for further upside?
I think stock is moving in upsloping channel in this on the weekly chart. Stock is almost now trading near to its important support area, which is placed at around 602. I think if it continues to hold above 602, some pullback action towards 655 to 660 we can see in the near-term perspective. And if it all the stock crosses above 665, this really can extend to 700 plus kind of level also. So overall, the structure is bullish. I think he may hold on the position with a stop loss of 600 if he wants to keep some stop loss. And I think if it's a stop loss not breaks, so I think possible target towards 700 to 720 we can see on a positional perspective.
Okay. All right. Aarti Industries is the next counter that we're talking about. Naveen from Bengaluru has got this. He's got 350 shares at a price of 749. Stock is practically unchanged today. But he's seeing a significant loss right now. What would you do with something like this, Ashish? Would you book it at this juncture? Is seeing a loss of 60,000 rupees or thereabouts?
Yeah, Aarti Industries again a stock which is not going anywhere if you see for quite some time. Though if I see fundamental wise, like they are quite stable. They are doing almost 130 crore plus profit quarter over quarter. So fundamentally nothing wrong with the company. Because growth is not forthcoming and sector is also not in fancy for quite some time. Like your chart also says 6 months, the stock has not gone anywhere. So my suggestion will be to wait till 600, 625 and any rally, you should try to exit this and shift to any frontline pharma company which can give you better return. But Aarti Industries are not that.
So follow up then at this juncture, Ashish, what would you buy from the pharma space? Because a few of them have already run up in the recent past. What, according to you, is still worth accumulating?
Yeah, I suggest we can look at stocks like Mankind Pharma, which can give you much better returns, as well as DB Lab, which is also, in my view, quite attractive at this price. But Mankind Pharma is my bet number one. It can touch a price target of 3,000 rupees, maybe once next quarter number comes.
Okay, 3,000 is the potential target for Mankind Pharma. 3.5% just today. It's a stock that is buzzing in trade. Safari Industries is the next counter that we're talking about. And this is a question all the way from the other side of the world, Canada. We've got Shivam, who's writing in, who's bought at levels of 2,019 rupees per share. He's got 353 shares and he's looking to hold for the long term. He's wondering whether he should do so, though. Ashish, a lot has been said about the industry. Everybody needs a bag to travel, And certainly if you're coming to India from Canada, you need one. The question is whether Safari is the company that you should buy a bag from.
Yeah. If you go nowadays in mall, they are doing very brisk selling. If you see in the American Tourister or other brands or VIP or Safari, etc., and buy one get one free, etc., is getting a lot of traction in this industry, and they have sold umpteen number of suitcases. So, in my view, as more and more people are traveling mostly now by air, or they are preferring to travel by air, so they need better suitcases also to travel in that manner. So there's a reason companies like Safari Industries are doing well. Those stock is expensive, almost 12,000 crore market cap. But again, a small equity base and consistent performance is keeping momentum in this particular stock. My target for this stock in the next 1 year will be 3,000 rupees. So lower liquidity is there, but fundamentally good.
Fundamentally good. All right. Hope that answers your question. We've got Manish Jain who's asking about HAL, and this is for trading purposes. He's bought 5,500 and he's got, or rather he's bought at 5,500. He's got 1,000 shares and he is incurring a loss and he's looking to hold simply for the next month or so. If it is an exit, at what level should you consider doing so? Rajesh, the way things are going, not really certain that he will recover his buy price, but then how does he limit his losses? What is the strategy that he should employ here?
Well, stock is in downtrend on a near-term structure. Stock is now slipped below to 20-day, 50-day moving average. So that clearly shows that, in the near-term perspective, some pressure is still there in the stock prices. Though long-term structure is still bullish, some recovery we can see as most of the defense companies are showing some recovery from their recent swing low. Again, looking at the structure, we believe that 4,700 would be the major key supply zone for any kind of recovery which we are seeing on the near-term perspective. So around 4,700, I think he should review again this stock. And if he wants to exit around those levels, because the tenure is very small, like, he wished to, exit in 1 month time frame only. So I think 4,700 is the level where he may again review the stock. At this juncture, I would suggest to keep a strict stop loss of 43.60. That's the stop loss he should follow, because if it's go further down below 43.60, maybe further pressure we can see in this stock prices, and possible 4,200, 4,150 kind of level can be there in the stock. But I think hold for some time. 43.60 is the stop loss. In recovery, 4,600, 4,750 are the next target.
The next question is coming in from Weber. He's writing in from New Delhi and he's bought Indian Bank at a price of 550, 1,000 shares. And the question is quite an interesting one. Why is this stock lagging despite a good financial performance? And it depends on what the lens is that you're looking through. Weber, if you think about it, 26% gain over the year to date, just in 2024, is not a bad return at all. It's just that you've been spoilt perhaps by the outperformance of certain other stocks in this massive bull rally that we've seen. The stock is up as much as 4.4% as of now in trade today. I will come back to you, Rajesh, on the charts. It's gaining quite handsomely today. His question is, can it hit 600 in the near term? What are the possibilities of that happening?
The long-term structure is bullish. Stock is recovering from its recent swing low on a monthly chart. Some sign of recovery is there. Looking at the near-term structure, I think immediate major hurdle is placed at around 560. Yes, if at all its stock crosses 560, possible target towards 600 we can see in a 1 month to 2 month time frame. But still 560 needs to cross on the high side. At this juncture, I would suggest to keep a stop loss of 510. That's the important level to watch for on the downside. If it's not breaks below 510, I think recovery can be there in this stock. It may take time to reach to 600, but not in 1 month time frame. But 560 is the level where again he should review it.
Another significant loss, and this is from Rakesh. We've got Rakesh Gupta from Delhi, who's bought 18,000 shares of Yes Bank. Let's pull that chart up and see where it's currently trading. And a lot of people getting into Yes Bank at elevated levels. He's bought at levels of 28. The stock is currently trading at 23 or thereabouts. Ashish, there are some people that are talking about the possibility of an improved performance for Yes Bank that really has to be seen on a consistent basis, though. What would you do with this? 18,000 shares bought at levels of 28. The stock is trading at 23 right now.
This is the problem with Vodafone Idea and Yes Bank kind of a stock, that most of the time when stock show a lot of momentum, lot of volume takes place, retail investors just enter mostly at that time, and then they have to really wait for a long time, and they lose patience, and after some time they sell, that the stock moves higher. So this is a test of patience that Yes Bank is also taking. And again, the reason is the stock is not moving. There's a reason for a stake sale, that 51% stake sale to a foreign bank is still not permitted by RBI. Until and unless that will happen, there's no trigger as such in the stock. Because if a bank I need to buy with just 500 crore quarterly profit, there are plenty of choices available in PSU banks, which are available at much better valuation. When your Indian bank doing 2,500 crore profit every quarter and available at 75,000 crore market cap. So why do I Yes Bank is my question. Yeah, so in my view, you need to exit from this bank until that stake sale related thing materialized.
That's a point well made, and there are several bargains according to a lot of fundamental experts in the banking space to be had. Gentlemen, thank you so much for joining us on this program and for answering all the questions that you did. Viewers, we weren't able to take all of your questions, obviously, because of the paucity of time, but we will be back tomorrow to take more of your questions, so do stay tuned. Lots more coming up over the course of the day. This is NDTV Profit.